We've been hinting at this. Let me just put a fine point on it. The way a Spigot NIMCRUT works is you have a NIMCRUT just like any other. It's going to pay out the lower of that payout percentage or the accumulated amount or your income. But what you do is you layer an LLC in between the NIMCRUT and the assets. So the NIMCRUT owns an LLC, and that LLC owns the assets. And what happens now is, let's imagine that you've reached the point where you want to sell some stock inside of the NIMCRUT. Or let's say you've got a 2% a year dividend and you don't want that money to come out as a distribution. In a traditional NIMCRUT, it would have to if you had the amount to distribute. By adding this LLC, you're able to block that income so that the trust doesn't see it. And if the trust doesn't see the income, it's not forced to distribute. And so it's basically a NIMCRUT, but as long as the assets and the proceeds stay inside of the LLC, there will be $0 of net trust income, net accounting income. And as a result, the NIMCRUT won't be forced to distribute anything. So you have the NIMCRUT, you have the LLC owns Apple stock, you sell the Apple stock at a gain, but because it's in the LLC, the NIMCRUT doesn't see any accounting gains, and as a result, it's not distributing anything. Then down the road, when you decide it is time to take some distributions, you've reached retirement or you want to buy a house or you want to send your kids to college, you then take some of those realized gains from the LLC and send them up to the NIMCRUT, distribute them to the NIMCRUT. Now the NIMCRUT sees those gains, recognizes them, has accounting income, and distributes. So if you take $100,000 from the LLC and send it to the NIMCRUT, well, now the NIMCRUT has $100,000 of recognized income, and it'll distribute that $100,000. And so this is just a much finer tuned, more controllable way to decide when the income from the trust gets recognized and distributed.
Yeah. And the way to think about this is, and this is where the name Spigot comes from, is you get to turn on and off the faucet of when income gets realized. Before, the control you had was when do you realize capital gains, and you don't really control dividends, interest, yields. But here it's effectively you get that control. You or kind of someone who's controlling the LLC, you get to say, hey, when does that distribute it? And it gives you that control there to control that. And as a result, you can get even more tax deferred growth, which again, all of taxes, all of finance really ties to this idea of compounding.